No. So let's start with what we are supposed to do. Today we are looking at the charts themselves to identify what we have learned um, yesterday and on Friday on and on Saturday. Okay, so I want us to look at this platform that we are currently using. This platform, it is only used for analysis, to analyze the market, to be able to see the direction of the market. It is only used for that purpose, okay? It's not used to trade, it is only used for analysis. So we call it trading view. So one can get it by typing trading view. Trading view, trading view derive. Yes, one can get it by typing trading view derive. Then you open this trading view derive. And then the instruments. Then here we go. We can now see charts. Now there at the search bar, once we remove the instrument we are currently seeing, once we remove, then we have an opportunity to look at more instruments. These are instruments that we analyze, and these are the instruments that we trade. They are indices. They are indices. They are indices. Okay. So they are indices. There is volatility 10 first, volatility 10, volatility 15 first, volatility 20 first, and so on. And there are so many. So when we are trading, we go, either we choose one and then we work throughout that one for a longer period of time, or we can check all of them so that we look for the one that give us the best opportunity to trade. So today we are looking at identifying the levels and also identifying the patterns, the chart patterns that we have learned. So if we use, for example, this particular one, 10 first, all right? So this in there here, it shows us the time frames. These are time frames. So the time frames, it tells us that every candlestick pattern, that every candlestick that you see here, it is formed, for example, within 24 hours. Every candlestick that you see here, it is formed within 24 hours. If you click at 8 hours, then you can see every candlestick that you see here, it was formed in 8 hours. If you go to a 4-hour time frame, every candlestick that you are going to see, it's formed in 4-hour candle in 4-hour time frame. So which means one candlestick is equal to 4 hours. If you go to 2 hours and so on, 15 minutes, you will be able to see that every candlestick that will appear will be formed in 15 minutes. You can go lower, is 1 minute. You can go lower is 1 minute. Okay. I don't know why. I think maybe the network is a bit unstable. All right. So let us go back. Let us go back to the daily time frame. Okay, the internet is a bit is giving me problem. All right. So we should look for the levels where we buy from or we sell from. So when we look for these levels should be very obvious. It should be very obvious. You shouldn't struggle to get this level. It should be very obvious. That is one of the criteria. The levels should be obvious. It's one of the criteria. Now, if we want to draw a resistance, we take our horizontal line, and place it at the highest level the market have been. So if you, let's say we place it there, okay? At this particular time frame, at this particular level, this is the highest the market have been, all right? So, and we can see something here. So if this is the highest the market have been, what is the lowest the market have been? This will be the lowest the market have been. You see that? See, this would be the lowest the market will be have been. So meaning this is our level of resistance and this will be our level of support. Now, I just want to move it down so that it can touch more levels. Okay, there. 1, 2, 3, 4. Yeah, this touches. Yeah, can we see up here that the market tried to break through this level and it never came back to that particular level? I mean, it did not get momentum to pass through that level, and it gave us a very familiar candlestick pattern that we are very familiar with. What candlestick pattern I'm asking, I will now be asking from you, what candlestick pattern is this and what it is responsible for? So I'm gonna randomly pick, I'm gonna pick one of you randomly. Let's start with Mr. Kelly. What candlestick have I marked and what it is responsible for and where it is formed?
It's very small on my cell phone, but it looks like an evening star, and it shows that it will go down.
Absolutely. It doesn't look like an evening star. It is actually an evening star. It's actually an evening star. You see that now. So that is an evening star. Now, this is a candlestick pattern that give us an opportunity to sell. And it is the reason why this market have moved from the resistance to that support level. Just that this is a bigger time frame, obviously, this is a bigger time frame, but we would, us as traders, if we identify our level and we see this candlestick pattern, we need to sell from there. After the close of that candlestick, our stop loss, meaning this is how far we are protecting our balance. Our stop loss is this red one. We are going to put it there and then we target the next support. And we target the next support. So giving us an opportunity to make money out of this particular trade. To make money out of this particular trade. So we would have sold from there based on this candlestick pattern, at a very right level up to this support level, and then depending on your volume, you would have made more money or you would have made small money depending on your volume. Depending on your volume, really. And also, your volume is also determined by your account. The bigger the account, the bigger the volume you can use, and the more risk you can use, you can take, and like that, you can make so much money. Okay, so that is very good. Then, so that is for the resistance level, for the upside, this one. We also have another level, we have another level down there, a support level. What can we see at that particular level? I want us to see the turning point. This is a turning point. I want us to see what candlestick pattern is this. Let me get somebody there. May Evelyn.
Yes.
What candle?
Hello, Doc.
Hello, how are you?
Fine, thanks, and you?
Very good. So, what candlestick pattern do you see at the bottom, which is responsible to push the market upwards? Which was responsible to push the market upwards there?
It looks like the doji.
It is a doji.
Doji.
It is
doji.
a
Okay.
doji. Absolutely, it is a doji. It is really a doji, and this doji.
Okay.
We learned yesterday that a doji is a reversal pattern, and it is a reversal pattern, meaning if it's found at any of the level or any of the two levels, if it's found at the bottom level, which is a support level, it will reverse the market on the upside. If it's found at the resistance level, it will reverse the market on the downside. So literally, a doji is a reversal candlestick pattern. You are very correct. Very good.
Thank you.
Yeah, so we are supposed to buy from the support level to the resistance level. So this is where we put our stop loss. Our stop loss, we put it below. If we are buying, our stop loss, we put it below. What we are saying is that if the market does not respect this level and it has to break through, this is how much we can lose out of this trade. If the market decides to move in that direction, this is how much we can make out of that trade. Can you see that what we can make and what we can lose are totally different? And it clearly shows what we can make out of the trade, if it works out as expected, is more than what we lose. And that is actually the goal in trading, to lose less and win more. But when the real account starts, most of the people, they always start off losing more and they win less, because it's an emotional game. So that is why we need to leave the emotions out of the way. We need to put it aside when we start trading on real account. Okay. Again, this is the same level. Our resistance. It's our resistance. Let me remove this one. It's our resistance. Okay. It's our resistance. This at this particular time, this is how high the market have gone down, and then this particular time, that is how low the market. I mean, this is how high the market have gone up, and this is how high the market have gone down. So again, what candlesticks are we seeing? Which candlesticks are we seeing? Let us start with this pattern. What is that candlestick pattern? Let me see if I can get somebody from here. Oh, Gary, I think. Okay, let me ask Gary, Mr. Gary. Mr. Gary, what candlestick pattern is this? If you look at it,
I'm not so sure, but it looked like a bearish engulfing candle.
the bearish
The
engulfing.
first big one.
The bearish engulfing.
Oh.
Look at it again.
Harami.
Don't these two candlesticks look almost the same size?
Yeah, they look almost the same size.
Okay, so what would it be then? It's on the upside. It is on the upside, meaning at the
Can I
resistance.
try?
Yeah,
It's a harami.
harami.
Yes,
Which harami? Which harami?
bearish harami. The bearish harami.
No, no.
I will say it's a bearish tweezer.
Ah,
A bearish tweezer.
yes. A tweezer top. It's called a tweezer top. Yes,
That
this.
top.
Yeah, so
Okay.
it's a tweezer top. Yeah, so the candlestick patterns will not look so perfect like they look in the textbook. They will look somehow, but with experience, we'll be able to pick up. Yeah, so
Madama meeting ang. Eh? Okay.
but with experience, you should be able to pick up. So this is the tweezer top. So these candlesticks are almost the same size and the same height. So there's a little bit of variation, and which is actually making Forex quite interesting and very dynamic. So this is a tweezer top. It is one of the reasons why the market was pushing upwards. I mean downwards. Now there's also this one. There's also this particular pattern. There's also this one. Okay, anyone to tell us what this candlestick pattern might be?
Could it be a shooting star?
That's
Shooting star.
an evening star.
Yes. No. Yeah, it is an evening star. It is an evening star and the shooting star. Yes, it is a shooting star and an evening star. This three candlestick, this three, 1, 2, 3, give us an evening star, and this candlestick alone give us a shooting star. So we have two we have two bearish candlestick patterns that is confirming a possible sell. So what we would have had we seen that, what we would have done, we would be selling we would be selling from there, stop loss above that level, take profit to the support. Let me just quickly check. To the support area. So we would have profited from that account. I mean, from this particular trade. So it looks really perfect. It was a very perfect trade. One could have benefited from that particular trade. You see that? So now I want you to look at this one. Look at this one. I want you to look at the candlestick in the middle. Let me remove it. Let me remove. Okay. I want you to look at this candlestick in the middle. What candlestick is it? The one in the middle? This one?
That will be a shooting star.
Is a shooting star. Is this shooting star at the right place? Is it where?
No.
Is it at the right? Is it at the place where we are supposed to identify it for it to work?
No.
No.
No, it has to be at support. Whilst this one, I mean, it has to be at resistance, but whilst this one is at support.
Absolutely. It has to be at the resistance level. But right now, it is at the support level. So we could not sell. That is why we are saying when we sell, we may only sell from the resistance level, not at the support level. Even if we are given a signal to sell, it just becomes as a trap. It comes as a trap, So that is why it's very significant that we identify the support level and the resistance level. Okay? So let's look at another instrument. Let's look at another instrument. The next instrument. And in this particular, and for now, I want us to use a 4-hour time frame. Okay, a 4-hour time frame. Okay, let's so let us look at the resistance, this resistance level, this one there. I want us to look from there. I want us to look at this resistance level. That resistance level. Okay, this is our resistance level. Okay, so this level is all the way up to that. All the way. It's that level. So now if we look at this level, what can we see? If we look at this level, what can we see? What candlestick pattern do we see there? Anybody? What candlestick patterns do we see here?
Dojis.
We have one doji there. That is one doji. Then we have one shooting star. We have another doji. And a dragonfly doji, which is not even supposed to be there. And you can say a hammer, which is also not supposed to be there. Can you see how the market is respecting those particular level with the formation of candlestick pattern. So this one, it's showing us that it is not always that when you sell the market, when you sell, for example, you sold because you saw this doji, right? And you put your stop loss above that level. So if you are not patient enough, you will end up closing the trade, because this may even take the whole day. You are just waiting. You are just waiting to check if you are making money out of the trade, and then until you get frustrated. So just when you get frustrated towards the end of the day and you close that trade, that is now the time the market is starting to move. And then when you wake up tomorrow, you see this move that you did not participate, you start getting angry. You see, this forex trading is very emotional. When you really come to emotions, it's one of the things that can really get the best out of you. So that is why when we sell at the resistance level, we put our stop loss just a little bit above our resistance level. We put our take profit at how low? At the previous low. Like in this case, our take profit is supposed to be there, because this was the level the market. This was the level the market. This is the support level of the market. So this is where we are supposed to put our take profit, and then we wait. So we wait for the market to tell us that we are wrong and hit our stop loss, or to tell us that we are right and hit our take profit. Yeah. So that is another one. Then look at this. What candlestick pattern this would be? What candlestick pattern this would be?
Bullish engulfing.
Not really. It is because this week is longer than that candlestick, meaning this is a tweezer bottom.
Top. Oh.
Yes, it's a tweezer bottom. You see that? It's a tweezer bottom. Okay. So the market failed to go up there. And these things will happen quite often. It's not always that the market will respect to go up there. So that is why we have what you call trending markets. Now the market is now showing us it's going down. It's a downtrend, and hence we don't expect the market to go up there. We expect the market to break this level at some point and come back to that level like it did there, and it gave us another tweezer top before it actually sold out. So this is expected. This will happen, and all we need to do is to master so that we understand exactly what we have learned. Okay. So, and now, if I may ask you, what type of market structure this would be? Let me just mark it. What type of market structure is this one?
A ranging market structure.
It's a ranging market structure. Okay. What type of market structure will this be?
A bearish market structure.
This is a bearish market structure. What type of market structure? This is
a bullish.
That's a bullish. That's a bullish market structure. So, meaning it is this market structure that we should look for an opportunity to sell. It is also that market structure we should be able to look for an opportunity to buy. Okay, and you see that all market structures are presented, and then we have a small range here with a small range there, and then it became a downtrend and so on. So all type of market structures will be presented: the ranging market, the downtrending market, the uptrending market, and the ranging market again. So this sequence of market structure will keep on repeating itself over and over again. So of your homework, because we only have about 3 minutes, and I don't want us to start over again. Your homework is to go to TradingView. You go to TradingView Deriv. Okay, I will copy this link and put it on the group. You go to TradingView Deriv, then you identify these levels, you identify those patterns. So you identify this level, your support level, you identify your resistance level, and you also identify the patterns, and then you see the behavior of the market structure. Now, after this was formed, what happened? Did the market goes up or did the market go down? Now, if the market went up, what should I have done? Should I have bought the market or should I have sold the market? And if I'm selling the market, from which level am I selling? Should I sell from the support or I'm selling from the resistance? It is actually the reason why you have that that particular table. And I will also share on the group a table of that was created by one of our students. I think of June. Yeah, student of June. It's a beautiful one, and we are going to use it as a footprint to help us identify our trading strategy. All right, so with this is where we are ending today. Unless there's a question, there's only 1 minute and a few seconds. Any question?
Evening, sir.
Evening.
If you can just share this whole session on the group as well, we'll appreciate it that we can go through it again.
Yes. I will
Thank you.
I will share it, and then you can go through as much as you like. Okay.
Thank you.
All right. Bye-bye.
Bye.
Bye.
Bye. Have a nice evening.
Okay. Bye. Nice evening.
Thank you. Bye-bye.
Bye.
Okay, bye.
Bye.
Enjoy the rest of the